Hello, my dear listeners. In this video today, I will be covering the very important subject for the silver stackers. It's a silver available supply, and I will also play the scenario with using AI. What need to happen that silver gets to $80, $100, and even to $150. Analyzing capital inflow necessary, what's going to happen with the supply. How much supply will become available in the market, what geopolitical events and economical events we need to, and I will analyze everything. So stick with me. Very important video for any silver stackers. That's all we need to know.
Right now, according to the Silver Institute, I'll just use their study, but they state that there's about a 3.6 billion ounce above ground supply of silver. But I want to break this down. Again, I gave this lecture as my keynote. So, as you know how long I've been in the silver market, and I started thinking just a couple years back, doggone, how many silver coins, I'm talking government stamped coins, U.S. maple leaves, Australia, are there? Is there a billion ounces? There might be. And so, according to the Silver Institute, there's 1.15 billion ounces of government issued silver coins. So out of that 3.6 billion ounces, you got 1.15 billion. That's what I would say tight hands. Those are retail investors that got a roll of Eagles or 2 Eagles for their birthday or 2 monster boxes or 20 monster boxes. But almost anybody that's bought a government-issued coin, be it from Australia or Austria or the United States or Canada, those are strong hands. Now we have also what we call medallions or silver rounds. Those are identical in usually shape and weight to a government-minted coin, but we can't call them coins because they are not pressed out by a government. So it could have Santa Claus on there. It could have a logo for your company. It could have a giraffe, an animal. It doesn't matter. It's a 999 fine silver that's in a round form. And so how many of those are there? 850 million ounces. So now we're looking at those two numbers combined. We're at about 2 billion ounces out of the 3.6 billion ounces. So what's left? Silver bars. And what's that amount? 1.6 billion.
But there is also estimates that much higher than those, like a silver in different forms, in jewelry or in a recoverable, in some recoverable form that needs some investment in production but could be recovered. And those estimates, you see that they are like a significance. There is 19.3 billion by a Silver Institute. However, the majority of those stocks are not really available for trading or investment due to various factors. Now, there is also a CPM group that claims much higher number, 1.6 million metric tons, above ground supply. The industrial recoverable, like 0.5 to 1 billion ounces. That could become available, at reasonably low prices. Okay, but now I run this scenario. You can read. I'm not going to read that. I'm asking about to convert 1.6 million of metric tons, which has become 51.44 billion ounces, but of course, lots of this silver is it's not recoverable anytime soon. So you don't have to be very afraid of that number. Okay, that's what I understand from this survey. So this is basically all the silver mined through the human history minus what has been lost. I ask if silver hits $100 an ounces, and at different tiers, I ask the ChatGPT to analyze how fast silver can become available, how much it will be, estimate how much will be sold back. I also specified $100 in today's value. I'm not talking about some catastrophic hyperinflation scenario, because we're talking reasonably low inflation. Okay, so so how much can become available? So there is 1.5 to 2 billion ounces could move from the ETFs. Recycle and industrial jewelry silver, 250 to 500 million ounces, because high incentive at $100 per ounce. Means refinery ramping up. Okay, so of course there is, because profit will, the miners will also increase their production as much as they can, but but it's still, you see 2 billion 500 up to 500 million up to 100 million. So we have 2.6 billion ounces here, possibly at the high end. physical bullion in the 6 months, you have a bottleneck here. It's not that there is unlimited machinery available to mint those bars, coins, and rounds. So how much it can be produced? Well, these capacities could be increased slowly, but not in a window of 6 months. Just for myself, like if you think that all the people who being, let's say, buying silver in the past 20 years, I doubt that there will be probably substantial net sellers at over $50 to like $80, $100, and especially over $100 silver. There will be net sellers. So we will category of the whole new buyers, of course, okay, that will come to this market. And I will silver, like the CPM group are above ground, total silver 55 billion. We don't have to be really like much afraid of this number, which is the true number, but this silver is not available for investment. Silver Institute identifiable stock 3.6 billion ounces, likely available in 6 months at $100. Okay, additional 800 million to 1.2 billion ounces. So there's a billion ounces that could become available in only 6 months. But if we, of course, over a year and a half, it will be much more. What will be happen? What capital inflows we need at different price tiers? A table by price tiers. What investment grade supplies? How much more silver will come to the market? In $60 and $80, additional billion ounces needs to be purchased to sustain the price. Between $80 and $110 in order, let's say, 1.5 billion. So to get to $100, we need to purchase 1 billion plus 1.5 billion ounces. Basically, as we move to past $60, past $80, $100, much of the high percentage of the current supply will change hands. So we will need a whole new buyers. So you have a chart how much silver will become available to the market. You see $100. Actually, a billion ounces here at $80, another 1.3 billion, and $100, 1.5 billion. So we need actually buy not 2 billion ounces, but 3.5 billion ounces here. 1 billion, 1.3, 3.8, almost 4 billion ounces need to be purchased by someone, considering the outflows, okay, to make a silver gold from $39 to $100. So that's the estimate of the ChatGPT on a short term. So it's better that it takes like a year and a half to reach $100. Next questions. It's actually, well, what need to happen? What need to happen, and who will be buying? So that's very interesting part of the video. So to move to $80, actually, we need 72 billion of net capital inflow. So this is the whole buying minus selling. Okay. So that's not that high. Okay, that is net after accounting for 300 to 500 million ounce investor selling. So interesting, the ChatGPT estimate that as we go to $80, up to 500 million ounces could be sold by investors. Okay, that currently hold silver. Okay, investor liquidation estimates by brackets. So how much investors will be selling? Okay, between $50 and $80, 300 to 400 million, $80 to $110, 500 million to 700 million, and over $110, 800 million to 1 billion. So basically, if we go to $110, all the inventory currently held by investors will be sold to new investors on ChatGPT estimate. Capital inflows required by brackets, 56 billion to $80, $80 to $110. Average price 95. Net investment demand, sales, buying minus selling, 56 billion, 57 billion, and 65 billion. That looks very low to me. So to move silver actually to $80, you need only $56 billion. Well, this is like, in my opinion, it looks very, very realistic. And then from $80 to move it to $110, another 57 billion of net inflows. So only 113 billion of net inflows we could see. Well, this is actually plus the selling, I assume, because it seems very low to me. Only $113 billion. One country could, like, one central bank could easily buy this if they decide to do. Okay, so then I asked the scenario if the the price moves from $80 and then it's consolidates and then it's moved to $150 in 12 to 18 months. If I see that, I think the place to be is in the minors. In these market conditions, if we move into those market conditions, it will be interesting to sell bullion for miners, in my opinion. Okay, main buyers. That's very important, in my opinion, to see what sovereign wealth funds, Saudi Arabia, Singapore, strategic hard assets reserve, Chinese Indian central banks, de-dollarization hedge. Okay, industrial, it's all assumptions, we're speculating here. Okay, so it's not of course investment advice, or it's all speculation. It's not it could happen, it could not happen, we don't know. Basically it's a hypothetical scenario analyzed by ChatGPT. I asked him what conditions we need to see and what's the most probable, who could provide the capital. Like, just assume. Institutional investors, inflation, fiat hedge. Okay, so wealthy retail, safety from collapse, disruption in banks. Okay, could happen. Gold to silver ratio traders. You see, in this scenario, he sees already like a 40-to-1 ratio, which is interesting. I would say if I see those ratios, it will also make sense to move into gold. 500. I think the gold will be, in my opinion, over $4,000. Required economics, political environment. Okay, monetary. Fed cuts to zero. Global coordinated easing. Makes sense. Very probable. Fiscal. 3 trillion plus US deficit, forced monetization by Fed. Very probable. And I think it's 3 trillion plus. I think it's 100% that it's going to be more than that. But it's only one condition. Like, we need more currency. Persistent USD weakness and forex volatility. Makes sense. Very probable. Inflation. CPI remain sticky over 4%. Stagflation narrative. Over 4%. And we have interest rates at zero. Possible. We're kind of lining up to this. Okay. Geopolitics. US-China Cold War escalates, Middle East tension, or a hot war. Very possible. Energy, oil prices $120, input cost inflation. Okay, so that, in my opinion, less possible because demand for oil remain economy is slowed down and demand for oil production. I don't see this one happening. Trust collapse, sovereign debt concerns in European Union, Japan, or US. Capital flight to metals. Very possible. So all very possible conditions here. 25, 26. Timeline overview. Now, okay, 6 months $80, 6 to 12 months $80 to $100. Physical shortages, industrial demand hedge, sovereign ETF buying. at 12 to 24 months, $100 to $250, fiat distortion, the dollarization, long-term supply crunch, systemic risk hedge. Still very possible. And then he offered to do the graph by tiers. So here is, I'm gonna pause it here if you want to look at, or you want to try your own research and ask for the graph. An explanation here. Key in size, large jumps in okay, so inflows in capital and inflows in supply. So you see here after basically $60 there is a huge inflows in supply comes to the market. So if what makes me think when I see that, so there's gonna be like correction and consolidation. It's not gonna, this scenario is most likely not going to play in 24 months, because those consolidations and everything will take 24 months. Yeah, I would say at least 3 years, unless we have very high inflation. So inflation, if inflation like a 10, 20, 30%, which is very I see very possible, but I didn't ask about those scenarios. So this model, you can play with it, go on ChatGPT and start asking different questions and get. So that's going to be it. Thanks for watching, and please like and comment to support my work.